Thank you so much. Going through a divorce can be very difficult, a very difficult experience. But if you are trying to get a mortgage while going through such a trying time, it could make matters even worse. Trying to qualify for a home loan with one income, refinancing a current mortgage, or even repairing credit created by two people may prove to be near impossible. Joining us to explore some options is mortgage broker Craig Strent. Mr. Strent, thanks for joining us this morning.
Thank you for having me.
Good to have you in. How do you get, say, your former spouse's name off the mortgage if now you are going through a divorce and have in fact gone through a divorce?
Well, really, there's only one way to get somebody's name off a mortgage, and that's to satisfy that mortgage. In order to satisfy a mortgage, you're going to need to pay that mortgage off.
Okay.
You'll either need to sell your house or refinance your house to get somebody off that mortgage.
Now, refinancing is important because now you're suddenly going from two incomes to one.
That's correct. Oftentimes, you have two incomes coming into a house, and now one person is moving out, maybe want to do something on their own. You'll go down to one income immediately. A lot of times the person staying in the house may have been staying home, may have been out of the workforce for a while, and may have not had an income to begin with at all. So there's some issues there as well.
Okay, what if you don't have a mortgage on your house? How can you take the name off of the deed?
Well, if there's no mortgage at all, simply writing a new deed and having that recorded will transfer ownership from one person to another. That's a fairly simple task that can be done by any real estate attorney.
Oh, okay, what if you're trying to keep the house? But the reason you got the house is because your spouse has the better credit. Now that spouse is gone. What do you do regarding repairing your credit while trying to maintain the house and the mortgage?
Well, that's difficult. A lot of times there are credit issues that come up as a result of the divorce. Credit cards may have been run up. It's possible that the two parties didn't decide who was going to be paying the debt while they were separated, and as a result, no one was paying it. And now the credit has been damaged, and the credit does suffer a lot during that time. So there will be a lot of issues we need to get around with regard to the credit.
And what role does credit and employment actually play in getting a mortgage or being able to get the house?
Well, credit and employment are two major factors in being able to get a house. And the credit, if it's damaged, it'll be difficult to get a new mortgage. You may have to have a stronger equity position in your house, or if you're buying a new place, make a larger down payment as a result of tougher credit.
But again, what steps do you have to take?
Well, you'll first want to get a free copy of your credit report, which is available from any of the three major bureaus. You want to make sure that the information on there is accurate. If it's not, first step will be to dispute that information. If it is accurate, and there have been some tough times on there, you'll need to take some time and straighten those accounts out and paying your bills on time for a little while before you can qualify for a new mortgage.
And what's a little while? What are you talking about?
Typically, a lender is looking for at least a clean payment history for a 12-month time frame before they're willing to really give you a clean slate to start over again.
So you tell a lot of your clients in that position you might have to wait another year before you can actually qualify for.
They may have to wait some time before they qualify for something like that, yes.
Let's move on. The no-income documentation loan, what is that?
Well, the main issue that comes up a lot of times when someone's trying to refinance their house during a divorce is that they can't qualify because of their income. As we mentioned earlier, they go from two incomes to one, or they may have been out of the workforce for a while. So a no-income documentation loan will base the loan just on their equity in the house or on their credit, rather than subjecting them to typical qualification ratios of their income.
Okay, I'm seeing a bit of a red flag. Aren't there higher interest rates for that?
There are. Oftentimes you'll pay a premium for that. Typically what will happen in that case is you'll pay a little bit of a premium, and down the road a little bit, typically a year to two, as long as you've maintained a good credit history, you'll often refinance that to more competitive terms. One way around that, though, is a lot of people will take adjustable rate mortgages in that type of situation, so that they could keep their rate where the market rate will be at that time.
Okay. Craig Strent, bottom line, what do you tell people? There's always hope?
There's always hope, absolutely.
Okay. Craig Strent, thanks for joining us this morning.
Thank you for having me.
Appreciate it. If you would like to have more information about mortgages when you are going through a divorce, you can get a free brochure by calling 1-800-914-9475. I'll repeat it for you, 1-800-914-9475. The extension is 2015. Great advice.